Well, I think we're ready to get started for the deep dive this morning. I want to say welcome to everybody that joins every Monday morning. This is July 1st, start to the second half of the year, certainly the July 4th holiday this week, and excited for that. We're going to talk about some buyer opportunities in the second half of the year, and I think there are opportunities that we need to be talking about. This topic is such a good topic. I was speaking with somebody on our team this week that had spoken to an agent that just basically said, I'm tired of talking about inventory being low, prices being high, mortgage rates being high. And yet that is the market that we're in. And here's my hope for the next few minutes to give you something that you can talk about with those that you come in contact with maybe over the next few days. There's certainly a lot of gatherings around July 4th and different people doing different things. As summer is in full swing, it feels like. Certainly here in Virginia, it was a hot weekend. I don't know about where you're at, but Jill, hot and sunny Southern California. I hear you in that. So it was same here. But to give you something to talk about with those that are maybe thinking about buying, give you a little perspective on this market that again equips you to have something in sort of in your back pocket to talk about. But Carol, see you there from Rock Hill, South Carolina. Good to have you on. Dennis, see you there. Rochester, glad to have you on. Got plenty of people coming on. Jackie, see you there in Boston. Great to have you on. Autumn in Canton, Ohio. So good to see so many people on. I think we may have a few other people join or a few less people join, maybe with the holiday this week. But listen, if you know an agent or you know somebody that needs to be on this deep dive, tag them here or invite them, share this deep dive so that we get the information out so people have it and they can be educated. The winning combination in any market is an educated agent working with an educated buyer or seller. That is a great thing. Tamara, see you there. Great to see you in Alexandria. Kathy, see you there. Megan, great to have you on. So many folks joining. Grateful for you. Grateful for the support that you give Keeping Current Matters in the deep dive every week. Our goal is getting this information out there so that folks have a perspective to educate people on in the market. See so many people joining from all over. Sabrina, see you there in Wisconsin. Tiffany, great to see you there in Houston. Diane, Gail, who else is on? So many folks on joining. Great to have everybody on. Bruce, see you there. Elizabeth in Miami. Let's get started. I'm going to go ahead and share my slides like we always do. Again, if you're a KCM member, you can go into the KCM member area, grab these slides, use them. Certainly at the end, we're going to talk about a couple of things that we're preparing for the Independence Day holiday that you can share to get great information out into the market. Our topic is buyer opportunities for the second half of this year. And I want to maybe set this time up with the next few months we have coming up, the next 6 months, the second half of 2024. We've been through the first half of 2024, and probably one of the slower starts to the year that we've seen. We thought the Fed was going to take action, thought we'd get a little bit of a relief on mortgage rates. We didn't see that, but I think I was talking with Kate Rezbeck last week, and we were talking about really the second half of the year being a transition, and that would be the word that I would use. A transition in a lot of things, a transition in inventory, and I'm going to show you that here in just a minute. Hopefully a transition in mortgage rates. Now, the one thing that I always say is if you try to predict or try to forecast mortgage rates, one thing I'll guarantee is you will be wrong. And certainly that is going to take the path of the economy and the Fed and all the things that sort of play into mortgage rates, but we'll talk about that in a minute. And it's going to be a transition in home prices, and I want to give you that perspective. My coaching to you right now would be, if you're a KCM member, take these slides and have them on your phone so that when you come in contact with people, you can talk to them about what exactly is happening in the market. Not that you can answer every question they have about the market, but maybe you can start a conversation to be able to give them the best advice on the plans that maybe they're thinking of. But if we think about this idea of transition with inventory, mortgage rates, and home prices, why is that the fact? Well, let's sort of rewind time. And there was a study that was done the end of last year, and I've covered it on the deep dive and in other places. It was done by Bright MLS. And last fall, 3 out of 4 buyers stopped their search essentially because of price. You see their mortgage rates being too high, home prices being too high, unsuccessful offers, or they couldn't find the right home. But no doubt, 3 out of 4 buyers stopped searching. So here's my point there. Forecasts are for mortgage rates to come down in the second half of the year. Now, there's questions about that, no doubt. People are looking at the Fed going, okay, are you going to do something? We have an election coming in. There's so many sort of variables that are at play. But the consensus and what the Fed said is or the Fed didn't say this, but the consensus was there would be one rate cut before the end of the year. We want to see that. Certainly that'll improve, we believe, mortgage rates, because that'll be a sign that maybe we're getting through some of the challenges we faced in the economy, challenges of inflation primarily, and we want to see that. But 3 out of 4 buyers paused their search last year because of price predominantly being driven not only by the rise in prices, but the rise in mortgage rates. Danielle Hale said this from Realtor.com. Home shoppers who persist could see better conditions in the second half of the year, which tends to be somewhat less competitive seasonally, and might be even more so since inventory is likely to reach 5-year highs. Okay, so Danielle Hale, chief economist from Realtor.com, she does an amazing job saying, hey, home shoppers could see some better conditions going into the second half of the year. So what is the factual basis to back that up? That, again, I was saying these are great slides to have on your phone. Is your maybe having conversations with people over the next few days and coming in contact with people. Why do we believe that? First of all, the month of inventory of existing homes is improving. You see this starting out January, February, March, April. Latest numbers, May, 3.7 months of active inventory out there. We'll get another reading shortly here from NAR on existing home inventory. But no doubt we're seeing that rise ever so slightly. That's a good thing. Remember, people, if we go back to that Bright MLS survey, there were a portion of people that said we couldn't find what we wanted, and so more options are a good thing. What we've seen this year is currently, as of the latest information distributed by Showing Time, is there's less buyer competition. This is as of April this month. This information runs in arrears. So more inventory coming in the market, less buyer competition in the market. So those are two sort of factors that play into maybe what Danielle Hale's saying. If they persist, they could see more opportunity in the second half. The next sort of variable in this, and we've talked a good bit about this, is there are more new construction options available right now in the market. As we've gone throughout the year, sort of ever so slightly, new construction inventory is started to creep up. And, new construction right now is an area that folks are looking at because builders have the flexibility to buy down a rate, to offer concessions, to do the things they need to do to move those homes. And certainly over the last couple of years, they have won because they have been able to do that. They've been able to step in and say, okay, we can buy down a rate on this home, or we can do this on a home and get you into that. Matter of fact, we've talked a lot about this. 1 in 3 homes right now in inventory are new construction. Builders are trying to build. They're trying to get them out there. No matter where you look, we're undersupplied in housing in this country, and builders are trying to get new product to market, no doubt. So if you kind of rewind, you go, okay, inventory is improving. Some of that's coming, a good bit of that's coming from new construction, less buyer competition in the market. And oh, by the way, this is a good thing. Home prices are moderating. We're not seeing the appreciation that we've seen over the last couple of years. And a lot of that has been due to the rise in price, the rise in mortgage rates. It's sort of tempered this market in moderated prices. Now, there's a lot of question. There's a lot of people talking right now about will prices fall, and we're going to cover that next week on the deep dive. I'm going to sort of break down what's happening with prices, and is a crash sort of on the horizon. But there is no doubt that once we've come through the last couple of years, this graphic goes all the way back to 2022 and shows the year-over-year change in price. and we're seeing a much more normal price environment. If you look at the forecast, and we've covered those extensively here at KCM, the average of the forecasters is right about 3% right now. If you were to ask me, I think somewhere between 3 and 5%. Certainly, this will be tempered by the path that mortgage rates take. If mortgage rates start to come down, we'll see more activity in the market. If they stall, kind of stay where we're at, and certainly if they go up, and I hope that's not the case, we could see less activity. But why, if we have rising inventory, why are prices remaining steady? And I want to give you this graphic, and this is a national graphic that really shows the reality of this market. And again, it's one I'd have on my phone. It's this right here. And if you've been a KCM member for a while, you're familiar with this. This goes all the way back to the late 90s. The look at inventory in this country: buyer's market, seller's market, neutral market. And the reality is we've been in the seller's market less than 6 months of inventory for quite some time. Now, this is a very, very different market. I'm fully aware of that. And certainly if you're watching and saying, hey, I'm seeing this be a little bit more buyer opportunistic market, maybe where I'm at, I hear you in that. And certainly on the upper end of most markets, there's more opportunity, may even be into a buyer's market in the luxury sort of space in a lot of places. But no doubt across the country, we're still undersupplied. We still have less homes on the market, which keeps that upward pressure on prices. I would really, really help people understand that is they're thinking about buying or selling today, because this graphic really sums this market up, right? If we were in a buyer's market, if we were oversupplied and heading that direction, you'd probably see a little bit more softening in price. We're not seeing the unhealthy price appreciation that we saw a couple of years ago. Very, very, what I'm going to call right now, normal and historically normal price appreciation. So if we summarize this up, inventory of existing homes improving, more new construction options inside of that inventory. Currently, right now, less buyer competition. And oh, by the way, home prices are moderating and forecasted to continue to improve. If you remember, the home price expectation survey that we look at on a fairly frequent basis shows, very normal 3-4% price appreciation going forward for the next 5 years. So that is a good thing as we head into the second half of the year. Those are things that I think we need to be talking about with buyers. And being able to take the conversation a little bit beyond, hey, prices are high, mortgage rates are high, inventory is low, all the things that we know about this market. Lawrence Yoon said this. He said the first half of the year did not meet expectations regarding home sales, but exceeded expectations related to home prices. Go back to the graphic we just looked at, right? That's the reason why. In the second half of 2024, look for moderately lower mortgage rates, higher home sales, and stabilizing home prices. I think it's very, very accurate. I like the word that he used, look for moderately lower mortgage rates. Some of the forecasts say, by the end of Q4, we could be in a place around 6.5%. We'll have to wait and see if that forecast is going to come true. But that's certainly the perspective that I believe NAR and Freddie Mac have had. If you did the numbers of last fall compared to, this fall, the end of the year, this is what this would look like on the average sales price in this country. You see it, average price back in October last year, $391, average price fourth quarter, $393, 8% versus 6.5%. That's a monthly savings of almost $400. So if we see some of those things come true, even with the price appreciation, even where things are at, it's a better opportunity going into the fourth quarter this year, and certainly over the life of the loan. There you see is a big piece. So if that does come true, folks say, well, hey, we'll wait. Maybe we'll hop in there. What are the trade-offs? Why would you want to do something now versus wait for that? Well, a couple trade-offs. If that does come true, more buyers could or would jump back into the market. I'm going to go ahead and say they would jump in the market if that were the case, no doubt. Home prices will continue to rise. I believe that is absolutely true. And waiting means losing out on equity gains, right? So you enter a market where there's more competition. We talked about the election cycle. Things typically slow down October and November of an election year, but then heat back up the year following. We typically sell more homes the year following an election, so more activity is certainly true. And there are trade-offs, no doubt, in the market that happen in those cases. I'll wrap up with this quote here from Zillow. It says, the housing market, like so many other markets, is almost impossible to time. The best time for prospective buyers is when they find a home that they like, that meets their family's current and foreseeable needs that they can afford. It's not timing the market, it's always time in the market. And that is the wonderful thing about home ownership. It's an amazing way for people to build wealth. It's an amazing way for folks to have a sense of pride of ownership of their own home. And we want to give you the resources always to be able to educate people and be able to articulate what is happening in the market. And hopefully we've done that. We gather on the deep dive every morning, every Monday morning for this reason. KCM founder Steve Harney said this: most agents know what's happening. Good agents understand what's happening, but great agents can explain what's happening. And my hope is you can take today's deep dive, put the slides on your phone, let me say it again, and you can explain what's happening in the market to those that you're going to come in contact with over the next few days. We'll be putting out as well and have plenty of content for Independence Day on the American dream and other things that you can share to get the message out there about everything happening right now in real estate. We'll be back next Monday on this topic of, is the market going to crash, and talking a little bit about prices and some of the dynamics that are in the market right now, because I think it's one that a lot of people are going to be asking about as we go forward. So hope you have a wonderful week, wonderful holiday week. We will see you back again next week on the deep dive, and take care. Have a safe July 4th.